I know that everyone's got busy schedules, especially our guest, Congressman Welch, who it looks like, I hope he's home right now or in an apartment in DC or someplace not in the office anyway.
I'm at Fort Knox.
Fort Knox.
in the gold room.
Ah, excellent.
I'm
well,
home.
thanks.
I'm in Vermont.
Thanks for watching out the Fort Knox at home for us. We greatly appreciate you taking time to join us this morning. There's a few other people that may connect while we're in discussion here. I know we got very limited time this morning, so we appreciate your carving out space in your schedule all the more. All the people on the line with us today are all from Vermont credit unions, all leaders of different Vermont credit unions, and pretty much represent all corners and areas of the state of Vermont. You know, because we're limited on time, I had sent a note to Megan yesterday about some of the things that we hope to cover. But I was wondering if we might start out with things that might be on your mind, just sharing with us what's hot for you today.
Well, you know, what's hot actually, I mean, there's two things. One is the legislation that President Biden is pushing. One is the infrastructure bill, and the other is Build Back Better. In fact, I think is extremely important and will be very, very helpful for Vermont if we can pass it. You know, the infrastructure bill, and I think we will be able to. The infrastructure bill is going to help, obviously, with roads and bridges. It's going to help with water systems. You know, in the water systems, it's such a burden on local property taxpayers. They just don't have the capacity really to do the upgrades that are necessary. And also it'll help with our schools. But also, if we are successful in that infrastructure bill, it's going to bring $100 million to Vermont to assist our community utility districts that are on the local folks that are trying to build out broadband to get internet finally to all parts of Vermont. So, you know, I see that as really, really essential, long overdue and transformative. And then on his other initiative, it's in really a couple of areas. One is climate change initiatives that are part of the Build Back Better program. And we all know that there has to be major public policy response to the challenge of carbon emissions. And it's an ambitious but overdue program, in my view. It provides significant financial incentives for our utilities to move from using fossil fuels to generate power to using clean energy. There's an acknowledgement that that can't simply be an obligation that's imposed on the private sector, because it would ultimately mean a lot higher rates for folks. And there has to be some public participation in order to help us make that transition. It does a lot on energy efficiency and gives homeowners, you guys will really be involved in this, who want to make their homes more efficient. There'll be a tax credit for them, but folks will be borrowing money. And I know a lot of your institutions have been very helpful on with loans for folks who are trying to make their homes more energy efficient. I really like that because it allows homeowners, my wife and I did it, to save money on our fuel bill. That's one. Number two, it's all local jobs, the folks who do that work. It's the local folks, and that's good for the economy. And then third, of course, it reduces carbon emissions. The other elements of that I think are really important, especially with the pressures on families, is there would be a big financial boost for childcare, both to make it more available, but also to try to supplement the pay of our really underpaid childcare workers. And one of the big challenges families are having, we saw this really intensify during COVID, especially when school was remote, was that absence of childcare is incredibly stressful for families. And, you know, I know all you guys know this. A lot of you may still be going through it, or certainly your employers are, where there's that insecurity that family has about the well-being of their children. Do they go to work? Do they stay home? Does one person have to stay home to take care of the kid? Not because they just not because they don't want to be in the workforce, but it's an option. So that's really important. Family leave is important. I mean, these are a couple of things that Vermont's been really working on hard. A lot of our employers provide this, but a lot really can't because they just don't have the financial flexibility to be able to do that. And so this in pre-K is also part of it, where there's a recognition that the sooner we get our kids being educated, the better. I'm pretty proud in Vermont that our business roundtable has for years been an advocate of early education and really beat the drum about that. And I think Washington, to some extent, is finally catching up. And the part about this that is significant to me, in addition to how this would be helpful to families, is that everything I've just mentioned, cleaner water, broadband, affordable childcare, family leave, that is going to be helpful to a family, regardless of what their political orientation is. Whether they voted for Trump or they voted for Biden, if they have kids, then they need childcare. If they are taking their kids to school and there's an unsafe intersection, and we have improved that with the infrastructure bill, their kids are safer getting to school. And it is a potential for some unification that this country sorely, sorely needs. So that's the work that we're doing that, in my view, will be, if we're successful, a recognition that governmental policy has to be really focused on trying to help our families in our local communities, and that's going to help our smaller businesses as well. So this is a big deal. The second thing that's real and we have to contend with is the extraordinary division in DC. And all of us lament that. We're in Vermont, we tend to be bipartisan. What's the problem? What's the way we can solve it? After January 6th, it's a different world down there. Over half my colleagues on the other side voted to decertify the election, and our democracy depends upon acceptance of, I think, two things more than anything else: the peaceful transfer of power and acceptance of the outcome of an election. We've always benefited from that. And number two, the renunciation of violence as a means of political persuasion. And on January 6th, of course, I was in the Capitol, and I was in the House when that woman was shot about 20 feet from me, just below. I was on a floor above her, and I was there when the mob was breaking down the doors to get into the House. And I've spent since then, every day I go through the Capitol, I talk to one of the Capitol police officers and ask where he was or she was on January 6th. And what they had to endure was horrifying. And that's my reaction as a citizen, just that these public servants were subjected to that attack. So it's created a new dynamic there. And my goal is to try to work through this as best as possible. But those are the two things, the legislation that I'm quite excited about, the political division that I'm quite concerned about. But it continues to be, a source of pride to me, how we operate in Vermont as opposed to how we operate in Washington. So I want to thank each and every one of you. And as you know, I always enjoy being with you in DC. And I always take a few more cookies than I should. But Joe never complains about it. But it's really good to see you virtually. Thanks a lot.
Thank you so much for sharing all of that, Peter. We greatly appreciate it. I know I always, on a personal note, I always find your, summaries of, what's going on in the halls of Congress and what's of concern to you of great interest and very enlightening and informative. And I'm sure everyone else does too. There were just two things that we want to focus on today quickly, one a little bit shorter than the other. But I think they tie in to most of the issues that you were touching on. And the first, and I think you're probably familiar with it, is the administration's proposal, actually an IRS proposal, to expand the reporting done by financial institutions on account holder information. And so we have some, concerns about that, substantial concerns about it. we don't take, as a credit union industry, we don't take a position on the legislation, the large-scale legislation you're dealing with in Congress right now to fund government or infrastructure bills and that kind of stuff. But this specific proposal, which is, last I knew, it was not part of legislation yet, but that it's out there looming in the shadows, sort of, that, you know, there's a possibility of that being on the table, maybe. And that would be a big,
That's the one. Yeah,
unions.
no, it would be. But tell me about that. That would be every $600 transaction you'd have to report. So if I want a scratch ticket in my corner grocery store, you'd find out about it.
If you were lucky enough
me?
to win a scratch off ticket, yes, for $600 or more, yes.
And I've never been a winner, but,
and you deposit it in your financial institution, yes, that would be reported. All of those transactions would be reported. And you know, there are those who argue that it's an invasion of consumer financial privacy. And, you know, I'll let other people debate that. The operational considerations for financial institutions, not just credit unions, banks, goes way beyond what they report today. So they're already reporting on an annual basis to federal government. But this gets much, much deeper and much, much more complicated for financial institutions to figure out how are we going to report all of this massive amount of information, because it would, you know, with that $600 threshold, so I understand it would cover, you know, almost all of the vast majority of account holders in the country. So I don't know if any of the rest of you have thoughts about that, because, you know, we've sent out lots of information about this and everything.
No, I'm hearing about. I don't think it's part of the legislation. It doesn't make sense to me. What I think are everyday. Well, here's what I think is going on. I don't think that's going to happen, Joe, for the reasons you mentioned. I mean, that's an incredible burden, and there's already been a firestorm of reaction to something that isn't even in there. My understanding of the background on this, and Megan, you can, Megan Foster from my office, and of course, Fauna Hurley from my office are both on the call, is that there is a desire in one, it's one I support, for the IRS to have resources to get better compliance. But the better compliance we need is from, you know, basically the billionaires. And you guys all know the information about the IRS and how it's diminished immensely its auditing, especially of very, very high net worth individuals. So I do want there to be IRS enforcement, auditing, and compliance. It's really essential. But our problem is not with you know, your everyday Vermonter and where there are $600 transactions. So I think that would actually interfere with the goal that I would have of having IRS enforcement and auditing applied where it can make a difference in where actually there's increasing evidence that there's been non-compliance. So I'll keep an eye on that. Megan, if I left anything out about that, but you know, a lot of my colleagues have been hearing the same thing, Joe, from their banks and their credit institutions and financial institutions. So it doesn't really seem to make sense. So it's overbroad, and how much of a real push is going to come from Treasury, I don't know, but I talked to the Ways and Means chair, and it's not anything he's excited about. So I'll keep an eye on it. But Megan, do you want to add anything? Is there anything I left out?
No, that's exactly right. I know there's ongoing discussions about in the Senate about levels or exempting, say, payroll processors. But, you know, Chairman Neal has definitely been strong in his opposition to the proposal. So I think it's probably DOA, but we'll definitely keep a close eye on it because we've gotten a lot of correspondence about it. So we thank you for reaching out to our office on it.
Well, thank you so much for that, both of you. And I neglected in the beginning to encourage everyone to, you know, feel free to weigh in or ask questions, make comments anywhere along this discussion if something comes to mind. From anybody else on the line, is there anything on this issue that that we've not touched on or not covered?
No, I think you covered it, Joe. I think Hi, Congressman.
Hi.
You're right
John.
that we're going to report everybody. With that threshold, you're going to be very few accounts that don't get reported. So it's unclear how the IRS is going to sift through all that data in an effective way. There's got to be different ways to do that.
Yeah, I think you're right, John. So we'll keep an eye on it, but I don't think it's going to happen.
Thank you again. I know we're running down the clock here. So the other issue that I was hoping that I could get some of our credit union leaders to kind of share some insights on is, what they've been doing in communities in Vermont to support consumers and communities through this pandemic and beyond. And I know, we've shared with you before the great efforts that credit unions and other institutions have done in distributing paycheck protection funds and so on and so forth, and their own individual programs and whatnot that they created to aid consumers and small businesses through all of this. But as I think I shared with Megan, there's legislation that was introduced earlier this year that sits in the House Financial Services, expanding financial access for underserved communities. And that legislation would alter the Federal Credit Union Act in minor ways, but it would enable credit unions nationwide to be able to better serve and serve more underprivileged folks, financially challenged folks and small businesses in communities that those credit unions probably can't touch right now. The effect of it in Vermont might be a little bit less dramatic than it is in a state like California, obviously, like most things are. But still, it would infuse a lot of financial support for consumers that's not there now because of people that can't be helped by whatever credit union they choose to be a member of. And as example of that, there are some things going on in Vermont credit unions now and have gone on over the past year that I thought it'd be good for you to hear about if you weren't aware already. And the first one that I'd like to point to is the press conference that New England Federal Credit Union had late last week. I forget which day it was, Thursday or Friday, but it was a major announcement. So John, I was wondering if you might, share that with all of us.
Thanks, Joe, but I'll just warn you, the F-35s are taking off. So we'll hear that in the background. So Congressman, you may have seen in the news that we made a commitment, a 3-year commitment to both Champlain Housing Trust and Vermont Housing Finance Agency, of $1 million a year for each organization. And it's not the first, commitment we've made, but we're very excited about it.
That's fantastic. That's really great.
Yeah. We're focused, as we have been with the HFA, on developing affordable housing. So they're the experts. They know how to do it. And Maura Collins and her team are excited about being able to do that over the next 3 years. And with CHT, we've targeted the efforts specifically toward BIPOC homeownership. And taken the position publicly that that it's important for organizations in the community to actually assist that demography in our community who have not had all the benefits many of us have. So, and the third effort was a first-time home buyer program that we've already had, that we ran for a couple of years, and we're reopening. And we actually help members with down payments and mortgage insurance. So just an example of what the people on this call do regularly in terms of helping Vermonters, but one that we're excited about.
Well, I'm excited about it too. It's really wonderful to hear that. I mean, it's the strength of your organizations are you're embedded in the local community and you respond to it. And obviously that is going to be a big boost for folks who didn't have access to that kind of financial service. So that's fantastic. I'm really happy about that, John.
Kate, I hate to call on you unforewarned, but I know that Opportunities Credit Union, we all know that Opportunities Credit Union, of all credit unions, probably, has the opportunity to see the challenges faced by, a lot of immigrant populations and lower income folks and whatnot throughout Vermont, and just wondering, what you've seen in recent months, and what you're doing in that arena.
Yeah, thank you, Joe, and good morning, Representative Welch.
Yeah.
We do a lot of counseling. In addition to making loans, we do a lot of counseling to people who are experiencing financial issues, collection debt, and so forth. And the three big expenses for them, of course, are housing, childcare, and healthcare. And this year, so far, we've made 30% of our mortgage loans have been to immigrants in Vermont. We're very, very proud of that.
Oh my goodness.
30%, right.
That's tremendous.
And we will, for example, there'd be a situation where we'll pre-qualify someone to buy a house, and they'll take that pre-qualification and go shopping, find the house of their dreams, come back and say to us they're ready to close on a mortgage, but they will have been outbid. And I know this is a familiar situation, not just to low income folks, but to everybody in the state right now. And that seems to be pushing them out further into rural areas.
Yeah.
So the cost of housing obviously goes down as you get further and further outside of Chittenden County. So I'm just pleased that the infrastructure bill is going to address broadband needs in more rural areas. And I'm also very interested in whether public transportation is something that would be a part of that, because if you're going to be moving further and further out, it means you're further and further away from your jobs. And most of our immigrant borrowers have jobs where they have to show up in person. They don't have the option of working remotely.
Right.
So just kind of curious about if the transportation and housing costs can be brought down for them, that certainly would really help their household budget.
Well, you're right about that. Two things. One, there is money in the bill for public transportation, and we'll have to get the details on how that would affect Vermont, because our public transit challenges in a rural area are in many ways much more difficult than even in urban areas where you have some of the big metro systems. And housing is a crisis everywhere. I mean, literally everything you're experiencing. I talk to my colleagues from all over the country, and they have the same challenges with workforce having to live so far away from where they work. And it's a brutal time sink in expense for folks who don't have the margin economically to do it. And there is significant help here in housing. And this is where there's going to be a lot of pressure, because, as you know, the president's original plan was 3.5 trillion. We're not going to get that. There's no Republican support for it. We've got to get 50 votes in the Senate. Senator Manchin, Senator Sinema say they want a smaller number. And that's where the smaller number, my fear is that it would affect our commitment to housing, because that's really essential all around. By the way, on that program, the number is big, but this is over 10 years. And our economy is expected, the gross domestic product is about $282 billion over 10 years. So when you put it in that context, especially when you consider the lack of investment in the last 24 or 40 years, it puts it in a perspective that makes that number, I think, have some validity. But thank you for your focus on two things that I think are essential.
Thank you. And I don't want the rest of you to wait to be called on. So if you've got something to share, please just jump on and do it quickly, because we are running out of time. Bob, Rob, Jean, Matt, anything from your corners of the state?
Good morning, Representative Welch. This is Jean Byard from Vermont Federal Credit Union.
Yeah, hi, Jean.
I would just like to kind of echo what other people have said. Housing for our younger staff group is certainly a challenge, and they're having to go further and further away from, the center of Burlington to be able to find housing, and they are challenged with, multiple bids on a house. Certainly in Vermont, housing prices have gone up to the extreme over the last over the last year, 2 years, 3 years. So just want to make sure
Okay,
that
thank you.
you're
Yeah,
aware of that.
thank you. Yeah, I mean, you're seeing it with your customers and with your employees.
Mhm.
Yeah,
Both.
thanks, Jean.
But we're hearing a lot from our employees about
Right.
housing costs.
And good morning, Representative Welch. Bob
Bob.
Morgan, North Country. It's good to see you again, and thank you for always making time for us. Just kind of reminding you of really what you already know is that credit unions in Vermont, whether it's what New England is doing with their charitable giving to support affordable housing, or the various different programs we all have to help members of all means, particularly low and moderate income members. We really view ourselves as kind of a extension of legislative efforts to help our entire communities kind of grow, thrive, and prosper. And that's what we're here to do. And please think of us when you need.
No, I do. You know how much I love you guys.
Absolutely.
Yeah.
Good morning. Good morning, Peter. Matt Lewandowski from Heritage Family Credit Union.
Yeah. Hi.
I just want to kind of echo what Jean has talked about, and not only does it affect our low income designations, but also market rate housing is very tough, especially in our area. We try to bring people into Vermont and to find housing for them to actually live and work here in Vermont. Very tough in our area. That market rate housing initiative is tough. So we could use some assistance on developing new areas that we can bring people into the Rutland region. So yes, that'd be great.
Yeah. Great. Thank you. Thanks, Matt. Well, Joe, I want to thank you guys. I want to thank each and every one of you. It's it's interesting with our new world of Zoom. Good news, bad news. It's good news that we can all get together and we're where we are and we don't have to drive and you didn't have to take a trip to DC. It's bad news that I didn't get my cookies.
Well, we hope to be able to provide you with some cookies come the end of February if we can get these people and others to travel to DC with us for our annual conference there. But I hate forecasting that far in advance in this environment.
All right.
So I won't promise that.
Yeah, I really, really want to thank you. And, John, you mentioned what you're doing with the immigrant community, low income community. I mean, we are so all in this together, and it's so essential for people beginning to have access to credit. And it's a scary thing when you don't have that much money. And none of you think of yourself this way, but to a really low income person who does not feel authorized to actually walk into a financial institution, that's a scary thing. And you making them feel welcome. I mean, what a difference. I tell the story a lot about when I got my first mortgage, $46,000. I didn't have any credit rating, but my banker played on the same softball team. So he figured, I don't have much of an income, but I'm probably good for it, and it's that personal interaction that we all value that, right? And I know you do, because you be the kind of work you're in, it is personal. And the potential you have with the positions you have to help build community and to get people started and overcome these really much more challenging times now than I faced when I was beginning. That's God's work. So thank you so very much for what you're doing.
Thank you for your time and for those comments. We greatly appreciate it.
Bye-bye.
Bye-bye. And if the rest of you wouldn't mind hanging on for 1 second, I'd appreciate it. No, I think he is Mr. Pichek. Thank you for joining us today. We greatly appreciate it.
Hey, Joe.
And this is unplanned, so I apologize in advance for zeroing in on you. But as long as we've got you on the line, I know that you and your department have been tracking all of the COVID stuff and whatnot, but there's probably some financial related matters that dribble across your desk from time to time as well. So I was just wondering if you have any perspectives you want to share today, or any hot items that are on the top of your mind that are keeping you awake at night, or anything at all. And if not, that's okay too.
Yeah, well, I mean, I wish I had gotten the opportunity to listen to more of the conversation, because it just, from what I heard from Kate and John and Bob and Jean, like it's just important to hear that. I mean, you hear it anecdotally, but I hadn't really put the pieces together about, what's the natural consequence of this hot housing market in Burlington, that, whether it's younger or BIPOC or immigrant populations are going further out. And then what challenges does that, what sort of secondary challenges does that bring up? I mean, that was just really interesting to hear about and to learn. So I'm glad that I was able to join in that. I just got off another meeting where we were talking about the mortgage industry in Vermont, and what does the future hold? Obviously, as you all have said, there's not enough market rate housing, affordable housing in many parts of our state. There's a lot of demand from out of state still, it appears. I'm sure you're seeing that, but there's also a lot of demand from Vermonters that are in their 20s and 30s looking to buy their first home. How does that all shake out? And what does the future of remote work look like for those that came here from other places with their jobs? If there's pressure from their industries or their employers to come back to the office, at least part-time, what does that do to the housing market? And will it sort of flip here in some period in the future where the demand is significantly greater than the supply, but will the supply start to sort of all of a sudden start to open up in a much broader way than maybe is good for the market? So it's sort of a shock on the one hand, and then it shocks back to the other. Hopefully not, but I guess that's sort of a lingering concern that's on my mind. A little bit longer term issue, and we don't have to talk about this now, but in great detail. But the issues around climate and its impact that's going to have on financial services here in Vermont is one that is a big issue. It's going to have a big impact. It's a longer term issue. It's not something that we're going to solve in a month or a year or a decade even. But I think more and more we're going to feel those impacts on our institutions that do mortgage lending, our institutions that insure homes and property. And we need to start having those conversations about being more resilient and trying to mitigate some of the worst impacts so that we continue to serve Vermonters well, our institutions remain strong, and we push back on some of those worst impacts. So just want to put that out there as an invitation to have that conversation, in the near future. And it won't be a conversation that will end anytime soon, but certainly interested in having that. So just, thank you for inviting me and let me listen in. I thought it was very valuable. And if you need anything from us, always reach out to myself. I think I saw Molly was on as well. We're always here to help.
Thanks very much, Mike. While we have them in our midst, any questions, comments, anything at all from anybody? All right.
It's good to see. It's good to see It's good to see everybody. It's good to see. It's good to be talking about financial work as well. We've been so focused on other things, unfortunately, for the last couple of years that I feel like this is like getting back to our roots here. So it's good to see everyone. And I also haven't had I look forward to the opportunity when we get together in person.
It didn't feel when the pandemic began like we'd be saying years, like with an S on it, in a multiple.
Yeah, right. 15 days to slow the spread, I think was the federal government, motto, if we all remember that.
Mm-hmm. Well, thanks very much, everybody, for jumping on the line. We are still working with Senator Sanders' office and Senator Leahy's office in their leadership positions. They have a few things cooking right now. Sanders has promised me, his staff has promised me that they'll have a time slot for us momentarily. It'll probably be sometime this month. And we're still working on Senator Leahy's office. Had a lot of communications with them, just can't pin down a date as of yet, but we'll get that to you quickly. Also looking to get some brief discussions like this with a member of the NCUA board and someone from the CFPB. So I hope that will be of interest to you. Thank you for jumping on the line. We appreciate it. Anything else for the good of the order? All right, well, if not, happy Wednesday, and have a good rest of your week.